Jerome Powell's speech is over and markets rallied. The Nasdaq is currently up over 1% on the day today. Things are going to be volatile into the end of trading, but it's pretty clear Jerome Powell was exactly as I thought he was going to be. I'll share with you what he said and what you need to know. I will be going over a more in-depth breakdown of this coming at 8 p.m. tonight, as well as where our markets are going next, where Tesla stock is going next. As you can see, Tesla was down quite a bit before the Fed, and now you're up 1% as well. So before we get into all of this information, hit that like button and subscribe to the channel. We do have some Tesla stock news to get into as well. We will share after this segment on the Fed. So let's go ahead and get started. Here was the first piece of good news that came out during the statement at 2 p.m. The program named Quantitative Tightening. Hopefully you guys know what quantitative tightening and quantitative easing is. It's when the Fed is selling bonds or selling assets. That is quantitative tightening. The Fed has been doing that for years now. For really since 2008 until 2022, the Fed was actually buying bonds, and that was keeping rates artificially low. Well, the Fed just announced, instead of selling $60 billion a month in treasuries or running them off of their balance sheet without reinvesting them, the Fed is now going to cap that at $25 billion. It was expected anywhere from $35 to about $45 billion was going to be the number. So this came in lower than expected. That means less selling pressure hitting the bond market, which means maybe yields can actually stabilize and go higher here. Take a look at TLT. When TLT sees selling pressure, yields go up because the price of the bonds are falling. Just like a dividend stock. If you buy a dividend stock, nobody wants to own that dividend stock, then the yield will go higher if people sell that dividend stock. If everyone wants to own that dividend stock and you bought the stock, well, great, you made some gains, but your yield is going to be lower if you're reinvesting your dividends, if you're buying that stock again, right? So same kind of logic here in the bond market. This was seen as a big positive to markets when this first came out at 2 p.m. But the real reason why markets rallied upon Fed Jerome Powell's speech is because it seems like we are far away from getting any kind of rate hike here. Jerome Powell made it very clear. They're only talking about whether to cut rates or to hold rates for longer. There's really no conversation about raising rates again. Jerome Powell says that monetary policy is still restrictive. Jerome Powell was asked about what conditions would merit raising rates again. And this was the quote, the answer from Powell that really sent the markets rocketing higher. Jerome Powell said, "It's unlikely we will get another hike. We would need to see persuasive evidence to show we are not sufficiently restrictive." And he said the totality of the data. That would be economic data, that would be inflation data, that would be inflation expectations, that would be survey, that would be basically all of the data would have to be pointing towards a super strong economy and inflation that is ramping back up again in a big way. And at this point, that looks unlikely. Jerome Powell said if inflation stays sideways, kind of doing what it's doing right now, then they can just hold rates for longer, and that there could be different paths towards actually getting rate cuts, one of which could be an unexpected weakening in the labor market. And then Jerome Powell added on to that says growth in the economy or labor market itself doing well wouldn't necessarily create problems for inflation. Jerome Powell pointed out, basically this entire inflation fight going from 9% on CPI down to where you are today in the threes, that happened based on a strong economy and a strong labor market. So he says there's no reason to think that can't continue to happen. But Jerome Powell did take note that it's probably going to take longer than expected. Jerome Powell was asked just bluntly, does he think there is enough time to cut rates 3 times this year, given just where we are in the calendar? Jerome Powell says, I don't look at it that way. I don't know exactly when that will be. And he went on to point out various different reasons you could get a cut, as I just mentioned, unexpected weakening in the economy, further progress on inflation. There's a bunch of different reasons that could get the Fed to cut rates, but it sounds like 3 rate cuts is not coming. The markets were priced for 1 rate cut December 18th. And that's why I was bullish, because a lot of people in the markets were expecting maybe the Fed was going to raise rates again. And yeah, it's not going to happen. We're not even close to that. And that's really the blunt reason why stocks are rallying higher right now. Powell was asked if there is anything that he looked at in January, February, and March inflation data that is a little extra concerning. Jerome Powell kind of looked around, he looked up, he was trying to think of anything, and then he just said no. He says, but we are taking signal that means we are waiting to gain greater confidence before cutting rates. Basically, again, reiterating, it didn't make them gain more confidence that inflation is coming down, but it doesn't really raise any alarms at the same time. Jerome Powell does say that higher goods inflation and higher service inflation this year has been a little, I guess, strange, if you will. It kind of caught them by surprise. Jerome Powell says, I think we will continue to see inflation fall into the end of the year. Over time, market housing rents will start to get reflected in the data. Jerome Powell was asked if the odds of no rate cuts in 2024 has changed, and he said, I don't have a probability estimate for you. We came to the conclusion it may take longer. This was also super bullish, and I posted this on the X account, literally said super bullish. It says, as inflation has come down, we are now focusing on the other goal. We are not focusing on the economy, or we were not focusing on the economy in 2022. It was only about getting inflation down. So now the Fed is really saying, hey, we're in better balance here. We're not just focused on inflation anymore, but we're also focused on the economy staying well, which really just shows, individuals like Tom Lee that have been saying, hey, the Fed's not focused on the business cycle as well as inflation, and that's positive. I think Powell just kind of reiterated that here. Jerome Powell was super funny for this one. He was basically asked about stagflation, and again, he kind of looked around the room and said, I don't see the stag or the flation. And everyone kind of cracked up, but he doesn't really see the stagnating growth or the high inflation. So the Fed is not worried about these kind of stagflationary data reports that we have gotten recently. Jerome Powell was asked if there's greater pressure on the Fed to cut rates because it is an election year. And Jerome Powell said they're doing what they can and doing what they think is the best decision for every single American in the country. That he actually clapped back quite a bit of that question. He said, go read all of the transcripts. He said he has been the Fed president, the chairman of the Fed, in 4 elections. And he said in those transcripts, you will never find any conversation about politics or we should do this because of this, anything to do with politics. It just doesn't happen. So, that's maybe not fantastic. Some people would hope a little pressure would come to the Fed by political bodies to get some rate cuts, but something that I have expected. Jerome Powell says that monetary policy is working as designed. Jerome Powell was asked, how confident are you rents will help inflation fall in the coming months? Keep in mind, housing or rent inflation is still the biggest contributor to overall inflation, and Fed Jerome Powell said that market rents are barely going up at all. Before that, it was very high. Those market rents take years to get all the way into rents for tenants. It just takes some time for that to come in. I'm confident as long as the market rents stay the same, it will show up in the data. But he's not confident in the timing. So it could come soon, it could come later, but he thinks it is coming. And then he was asked a question in reference to, hey, the economy's doing well and inflation is high. How does he kind of look at those things? And Fed Jerome Powell says, we actually have the luxury of having a strong economy and strong labor market and similar inflation to other countries, referencing a Europe and saying that was actually good. Jerome Powell was asked, or kind of more like a statement, it says, you backed away from the narrative of the economy needs pain to get inflation down. Can the economy continue without pain to get inflation down? That was what the Fed said back in 2022, that the economy would likely have to go through a period of pain to get inflation down. And Fed Jerome Powell said, most people thought we would need some pain. That did not happen. That is a tremendous result. I think it is possible those forces continue to work to bring inflation down, but that is not guaranteed. We are trying to get inflation down without significant dislocations in the labor market or elsewhere. Jerome Powell was asked if the unemployment rate popped back above 4%, would that catch their attention? Fed Jerome Powell says a couple tenths, of a rise in the unemployment rate probably would not do that. Overall, this was along the lines of my expectations, and I was bullish for this Fed meeting. Now, the markets were pretty bearish heading into this Fed meeting. We were only expecting one cut in December 18th. Now you're seeing the odds going back up again for the September meeting to be the first Fed rate cut. And overall, I think markets were just way too bearish and pessimistic on the Fed heading into this meeting. Again, markets kind of sold off yesterday, so it doesn't surprise me why stocks are doing well. But again, we will talk about this more in the next video and what this will ultimately mean for Tesla and other stocks. Look at that. Markets are right back down again. To be honest, this doesn't make a whole lot of sense to me. Let's go ahead and get into all of your Tesla stock breaking news today. But let's briefly start with the earnings coming out today. Right at about the time you guys are watching this video, you have Qualcomm, Devon Energy, Paycom, Carvana, Exelis, Fastly, Etsy, Core Mining, Sonova, and Albemarle. Qualcomm can be an important one. They do supply a lot of smartphone chips, other chips as well, but specifically for Apple, that one could be important. And you do have Exelis, which is a little known AI stock semiconductor provider as well. They're about a $3 billion market cap company, but they've traded in line with what semiconductors have done. So whatever they report could also have an impact on your AI stocks. Last night, Sawyer Merritt and Omar posted an article from The Information that they saw online. It was a public article that referenced an internal Tesla email from Elon Musk to his executives. Following Sawyer Merritt and Omar posting this article from The Information, Elon unfollowed them. But as of about 20 minutes ago, Elon Musk has refollowed them back again. Now, here is the article from The Information. It says Elon Musk emailed executives tonight to say two of his most senior executives, Rebecca Tanushi, head of the Supercharger Network, and Daniel Ho, head of New Vehicles, will be leaving the company and their teams dissolved. In that specific email, Elon Musk is upset that his lieutenants are not moving faster to thin out the company's staff. Tesla is set to improve healthcare for Giga Berlin employees. All new cars in the US must have automatic emergency braking by 2029. The NHTSA says the mandate could save 360 lives a year and prevent 24,000 injuries. IF Metal has today announced that the Tesla-approved repair shops in Sweden that have been taken out in a sympathy strike will once again be allowed to start repairing Tesla cars starting this week. Tesla's main X account, Tesla, says the Tesla Vision Auto Park is now rolling out to vehicles with ultrasonic sensors in the US and Canada. Elon Musk wrote on X that Tesla still plans to grow the supercharger network, just at a slower pace for new locations and more focus on 100% uptime and expansion of existing locations. We do have a Cybertruck that is seen in Belgium. Over the next 2 months, the Cybertruck will be touring many countries in Europe. So it's currently in Belgium. Now, this is some pretty big news. Tesla's Megapack factory in China is about to start construction. As Elon Musk has said, the demand for Megapacks is basically unlimited, and over time, that demand will continue to grow. You have to scale alongside that demand. We need more Megapack factories. So if they're building this now, it's not going to be up and operational for 18 to really 24 months in any kind of meaningful way. You want to get started on this now, because 2 years from now, there will be even more demand for the Megapack than there is today. Also worth mentioning is, besides FSD products, energy, generation, and storage is Tesla's highest margin business. So fundamentally, it does make sense to focus on this and get production higher, to get construction going on this next factory in China. Now, this is really good news as well. S&P Global has reaffirmed its BBB credit rating for Tesla. S&P says, Quote, we expect Tesla to maintain an adequate ratings cushion relative to investment grade peers in 2024 and 2025, amid downward pressure on its historically strong EBITDA margins and cash flow. Tesla's global inventory numbers really unchanged today at about 6,700 for the Model Y. The Model 3 continues to stair-step upwards, which is great, suggesting better production is taking place over in Fremont, currently with an inventory level of about 2,600. Model 3's Model X at about 2,400, and the Model S down here at about 1,200. And it looks like Tesla has truly found that sweet spot on Google, currently running about 4,000 different ads. Google Trends data for full self-driving remains very strong, currently sitting at about 42. Again, if this is your first time hearing me go over this data specifically, we were trading or trending anywhere from like 10 to 20 most of the time, right? You jump to 100, that's obvious. That was going to happen. Everyone just got a free trial of full self-driving. It came down, it hit 40, it bounced back up to 45, now it's at 42. If you trend in the 40s, that's a good sign that the take rate is probably much higher now, or the continued take rate is higher. If you go back down to the 10 to 20s, that sucks. If you stay in the 30s, that's good. If you stay in the 40s, that's great. Anything higher than that's just unrealistic to expect. So right now, I would say this is great. It's a great sign. The take rate is now higher for full self-driving. Which, keep in mind, FSD is a 90+% net margin for Tesla. Tesla already puts the cameras, the chips into the cars. When people download the software, you can make an argument it's 100% net margins at that point, because Tesla already recognizes the upfront cost to put the cameras and the chip in, whether or not people opt into FSD subscription. So this is a very margin accretive product or project. I guess both terms work here. So the higher that take rate is, the better Tesla's profitability will likely be. If we take a look at Google Trends data for the entire Tesla lineup, you can see the Cybertruck is now the most searched about Tesla product here over the last 12 months. The Cybertruck's at 24, the Model Y at 23, the Model 3 at 23, the Model S at 9, the Model X at 9. Currently, the Cybertruck's sitting at 50, taking a downward move. We haven't got any, big news. A lot of the tours and auto shows are over with, so that's somewhat to be expected. Doesn't, catch me by a huge surprise. The Model Y has recently went from 35 down to 26, and the Model 3 has went from 31 down to 23. You've seen this big spike when Tesla just cut prices. So this data still looks very strong, but it is trending downwards, and that's something to keep in mind. Now, historically, Q2 is not a huge quarter for Tesla. Q3, Q4 tend to be better quarters. And if you're looking at Google Trends data over the last 12 months, in which we are right now, what do you notice here? This is the best search trend activity that we've seen even going back to Q3, Q4 of 2023, Tesla's prior record quarter. So I think Q2 is going to be a pretty strong quarter for Tesla. At least that's what this data would say. Sentiment for Tesla over on StockTwits is improving a little bit today. Sentiment is sitting at neutral at 47. Yesterday, it was bearish at 38. So, again, I think Tesla stock itself has changed for the better. I think the company, when you think about a great turnaround story, that is Tesla right now. You are at the beginning of the turnaround story. So I think the stock will be more bullish going, into the future. When I will get concerned about a potential top or some kind of larger correction coming to the downside for Tesla is when retail investors, as seen over here on StockTwits, get extremely bullish again. Even when Tesla just had its best day in 3 years and was up over 15% in a single day, retail was still bearish. This is the best sentiment we've had in days or weeks for Tesla and it's neutral. It's at 47. It's actually slightly under the exact neutral level. So retail's still not that bullish on Tesla. When retail gets bullish, that's when you might start to see more downside for the stock. We're not even close to that at this current moment in time. Now, message volume is currently sitting at 47, which is considered normal. Yesterday, it was at 59. That's again one of those things that is volatile, but I really care about the sentiment here when it comes to Tesla. And I think you guys can look at this for yourselves, right? Stock twits, keep this up on your desk, on your phone, open on your, internet, on a tab. And anytime Tesla stock is really green, take a look at this sentiment. Until it's higher than like 75, like extremely bullish, I don't think a top is in for the stock, at least in this current rally that we have seen since earnings. Now, you can also see the participation ratio today is sitting at 54, which is normal. That's roughly where it's been for months now. MT Newswires is reporting that Tesla backs away from gigacasting innovations. It says Tesla has retreated from a plan for innovations in its gigacasting manufacturing process, Reuters reported on Wednesday, citing two unnamed sources. It's Reuters, and it's not a big deal. So it's really not affecting Tesla stock today. It goes on to say here, this information is believed to be from reliable sources, but may include rumor and speculation. Accuracy is not guaranteed. I've never seen that before in an article, so I doubt this is actually correct anyways. Option activity today from big money. These are hedge funds, institutions, and money managers. It's very low. Super positive, but very low today. You have seen 55 orders totaling $7.56 million with a positive order value of 67%. You do still have a short position in Tesla that is at multi-year highs, 3.84% short interest of free float, $19.52 billion currently in short positions, with 106.48 million shares that are currently sold short. CNN's Fear and Greed Index for broad markets is sitting today at 40, which is a little bit better. Well, it's actually at 42 now, which is a little bit better than last week when you were at 39. Overall, though, markets still pretty fearful. So let me know what you think about this information down below in the comment section. In the next video, we will be going over what the Fed said today and specifically how that will affect Tesla stock going ahead over the next coming days and weeks. In the meantime, hit the like button, subscribe to this channel. Let me know what you think about this information down below in the comment section. Enjoy the rest of your day, and I will see you in the next one.